us not getting along is much more serious than the individual topics. I know that we are at one of these critical junctures in Bitcoin gaining mainstream adoption or getting stuck. If we cross the chasm quickly, we get the benefit of a very quick S-curve in adoption. And we cross that chasm by, if I look at like core, my advice to core is I can definitely see this being the type of thing that perpetuated through the general public puts people on a pause button. I do not have a business if Bitcoin doesn't survive. And I think it only survives and thrives and moves along this S-curve by being.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Bob Burnett is the founder and CEO of Barefoot Mining, a company focused on the development of horse-class mining sites, and he is a vocal proponent for the expansion of diversity in Bitcoin mining site geography, scale, and energy sources. Bob has spent over 35 years as a technologist, including 13 years at Gateway Inc., a Fortune 200 personal computer company, where he led the company's product development efforts as chief technical officer. He has founded several companies in the Bitcoin mining space and is an evangelist and educator for Bitcoin and its importance to the world's future. Bob has a degree in computer engineering from the University of Wisconsin at Milwaukee. You've been on the show twice already before, so welcome back. You're like a mentor and a friend in the Bitcoin space to me. Bob Burnett, welcome back to the Bitcoin Matrix podcast. How are you?
Awesome. Great to be here, Cedric. Great to see you in person.
Yeah, well, it's been a while, I guess, since we started in person, but I kind of see you weekly. Some team meetings on a project we're working on, but it's nice to get together. But this kind of got teed off one of those calls. You just got back from a conference.
Yeah.
And so I think that was called D++?
BTC++.
BTC++. Okay, maybe it was hosted by D+.
It was hosted by Nifty Nay.
Okay, Nifty Nay. Okay, great. Pardon me. I didn't know all the details.
That's okay.
But it seemed like there was some interesting things going on there and in the wider community. So I kind of wanted to jump into this, but maybe we could just kind of back it up a bit and talk about like maybe from your perspective, with your background, particularly in personal computers and then sort of probably networked computers and internet, where we are in Bitcoin's maturity or adoption. And not so much from like a price perspective.
Yeah. Well, thank you, Cedric, and thank you for reading the bio. What's interesting about the bio, to me, having read it, is I realize I have to update it because unfortunately I don't have 35 years of experience. I have 40 now, so not your fault. But it's kind of funny as I get older. Like there was a point in time, like when you're early in your career, where you're trying to say, well, I have 2 years of experience, I have 5 years of experience, I have 10 years of experience. You're trying to get this number that makes you sound credible.
Sure.
And then what's ironic, you don't expect to happen, is on the backside, it starts becoming almost a negative, at least I think from the outside perspective, because like, oh, well, clearly if somebody has 40 years of experience in something, they're old, right?
Sure.
And I think the truth is there is a lot of ageism in the world.
Yeah.
I think there's a lot of ageism in Bitcoin.
Yeah.
There's a lot of animosity toward boomers, which, I for those who don't know, my Bitcoin or my Twitter handle includes the word boomer. And I do that in part because I want to try to change the perception of what a boomer is,
right.
and say, those stereotypes are very dangerous. But the reason I'm going through this is that part of me, having been doing this for so long, as you said, it goes back to the very, very early days of the personal computer and seeing that market emerge. What happened, what were the landmines along the way, what were the success stories? Why were there for like certain companies and certain products within the space. Why did some succeed and others fail? And it's probably not the reasons that most people think. It's not the best product always wins. Complete misnomer. Like that is not true. And the best company, at least to a certain degree, doesn't always win. You know, that that where success and failure occurred are really, I think, tied to handling certain situations. And we'll come back to Bitcoin in a little bit, but I believe Bitcoin is approaching a point in its maturity where we're all expecting gradually, then suddenly, right? We hear that term, or we expect this exponential growth, and we're seeing some signs that could happen, but it won't necessarily happen. And I think it's imprudent on the entire Bitcoin community to navigate what's called we call a chasm. It comes from actually a famous book called Crossing the Chasm, which was written in the early 90s, where there's a very, very famous graph. I'm sure you've seen it, Cedric. Probably most of the people watching or listening have seen it. It's a technology adoption curve, okay? And it's a bell curve, and it's divided into 5 segments. And on the left-hand side, it's like innovators, and the next is early adopters, and then it's like early majority, late majority, and laggards. And so you have this bell curve, and when you take any new technology, could be video cameras or electric vehicles or cell phones or whatever, they all go through this progression from innovators, which are usually they're people that love technology. And like in the Bitcoin world, those would be the cypherpunks primarily. Like those people were in it because the cryptography was cool, because the concept was cool. They're willing to deal with command line prompts to send money around, like that sort of stuff, right? And the next phase is the early adopters, okay? And there's a transition. The early adopters share some of the characteristics of the innovators, but they're a little less prone. They'll maybe deal with a few bugs. They're willing to go through a little bit of pain, but there has to be some functional benefit as well, but they're early. And if you think about a bell curve, the innovators are like 3 standard deviations, so they're a tiny portion of the market. They're 3 standard deviations from the mean, and the early adopters are 2. Okay. The early majority is 1. Okay, and it typically would represent like a third of the total market or the total world. So it's a massive piece of the market. And if you look at any technology, it makes or breaks itself on whether or not it can manage the transition from early adopter to early majority. Okay, that's where the S curve. So there's like an inflection point and an S curve. That's the inflection point. Right. But the early majority has a very different psychological profile from the early adopter. There's essentially no acceptance of bugs. Like, they're a little more aggressive, they're a little more open, but they're not going to tolerate inefficiency. Their risk profile is very different, right? I wouldn't call them risk averse, but they are cognizant of risk and not, willing to take a bunch, versus the late majority, which is the other side of the bell curve. Those people are very risk averse. They're not going to go forward unless they've seen the thing like truly proven for a long period of time, and they'll come in, but kind of begrudgingly. You can imagine, let's say, a 20-year-old. Not. It's not always age-based, but you could imagine a 20-year-old convincing a 50-year-old parent. The 20-year-old being an early majority,
right.
and the parent being
The late.
the late majority. Like, hey, I've been using this iPhone for 6 years, and look at all the cool things I can do, and the parent being just a little slow, kind of coming along, but eventually they come along. Right. Versus the grandparent who's 80, who's a laggard. Like they may never come, or they'll come. So anyway, the reason I'm taking you through this is that I believe Bitcoin kind of sits in this early adopter area right now, but fairly advanced in the early adopter piece. Okay. And if we look at the history of technology, what we'll find is that the jump from early adopters to penetration of the early majority is the hardest jump for any technology. And there's a lot of cases of failure that a lot of them get stuck. Either companies can get stuck there, or technologies, can get stuck there. Take example like the Segway. Remember the Segway?
The stand-up kind of thing? Yeah.
Or
VHS and beta. Well, is that a bad example?
That's an interesting. Come back to that.
Okay.
I think that's interesting for a different reason. 3D printers. I'm not.
Haven't really crossed the chasm.
Yeah, and it's been around for quite a while. But right. Now sometimes they do cross it, but it takes a really long time. But sometimes it just stagnates, and that's it just sits where it is. Right. So if we look at like the personal computer, I would say the roots of the personal computer started in like the late 70s. Actually, with a company I used to work for called Heathkit being one of the early ones. There were several early personal computers, something like late 70s, Commodores and Ataris and Heathkits that you would build yourself, like these sort of things. Truly, only the innovators were in there. Like, you had to be a geek. You had to be into this shit. You weren't really doing anything particularly useful with these things.
Sure.
But it was fun and innovative. And then we get to the early 80s, and now we have the Apple II, we have the IBM PC, then the IBM AT. Those kind of products were exemplary of that early adopter phase. By the late 80s, maybe bleeding into the early 90s, though, crossed the chasm. Okay, now it required a whole bunch of things to happen, like Microsoft to come out with Windows as an example, sure. Price points to hit a certain level.
Right.
If you're older, you remember the blue screen of death.
Yeah, totally.
The frequency of the blue screen of death had to
come down
significantly.
Right.
Like, and so, but also, I would say, like the companies, like I was at Gateway, as you mentioned in the bio, like we had to do certain things. Like we had to make the products more usable. So we would work a lot on like, how do you set the computer up when you get it home? Like how easy is it to do that? If you had a problem and there was a 1-800 number to call, is the person on the other line able to solve your problem, or were you slamming on the phone down and trying to get a refund? Like you had to do all these sort of things. And that, by the way, meant that if we look at some of the things I just talked about, like having a customer support line that worked, that had nothing to do with the product.
Right.
But
execution.
But it was part of the whole experience. And there were plenty of companies that had innovative products at great prices that were for shit at things like that. And they died. Some of them, by the way, even very, very big companies. You know, and there were other companies maybe worthy of some note if we have time, like IBM, that as they started to lose market share, tried to be a gorilla and force change on the market. And what I would call it for Bitcoiners the equivalent of a hard fork. They tried to force a hard fork and they lost. So when you're at this stage of development, a lot of things have to come together. And again, the psychological profile of the early adopters is different than the early majority. But the early majority is what you need. If you get the early majority and you win, you know, I don't say you're going to coast home, but you have penetrated the mainstream of society. Well, the reason I'm going through this is that what I found interesting, you asked me about the conference. There were actually 2 conferences in Austin, so it was 2 weeks ago. One was called TEMS, Texas Energy and Mining Symposium, or something to that degree, and the second one was BTC++. The first one was really around energy and mining, and then the next day was a 2-day conference, which was more developer-centric. I went to both. And I'm not slinging arrows at anybody, but what I found was this schism within the community that has been brought to light because of op return and fights over spam. And I think it is an interesting dialogue. But it's I think largely people that are in the trees and not looking at the forest. Like, hey, where are we going? What's the bigger picture? And if I look at like the core group right now, like our progression, I think core largely looks at the world through the technological lens and not the mass adoption lens. And this and you know, there's an old phrase, you know, the past is not prologue, meaning like, hey, what happened in the past isn't necessarily relevant. And so in part because we look at what was successful in the past, what did we learn about the past, was from the innovators and the early adopters. It's not the lens of the early majority. And I'll also say the early majority getting wind of dissension and schisms within this community on topics they can't understand and even take a side on is very scary to them. Now, thus far, it hasn't bled into, I think, mainstream forums. But, you know, Bitcoin podcasts, the last, you know, we're talking, I think, on May 20th of 2025. The last 2-3 weeks have been loaded with this. I've done a couple interviews on it. And, you know, partly what I want to talk to you today was, you know, even myself realizing I have to step back from this. I have to look at the bigger lens. Because, you know, what I want is, I want Bitcoin to be money for the next 1,000 years. I know that we are at one of these critical junctures in Bitcoin becoming that and gaining mainstream adoption, or getting stuck. Not necessarily failing, but, you know, it could get stuck, kind of get stuck into the Segway kind of technology bucket. And I think we have, as a community, those of us that are intimately involved in it, I think need to be aware that the perception from these early majority people needs to be one of confidence. Like they have to approach this with confidence too. Because, by the way, this is not, should I try the new cell phone? This is, should I take my wealth? Should I bet on, an economic system. Like, we're asking people to make a massive bet, especially from their perspective, because we can sit amongst ourselves and say, well, Bitcoin is actually a conservative investment. There's not a lot of risk in it. I think we hear people utter those things a lot, but from the perspective of the early majority, it's not. Like, so where I'm going is we have to cross this chasm, and I think if we cross the chasm quickly, we get the benefit of a very quick S-curve in adoption. And we cross that chasm by going into the marketplace with confidence, without dissension, with clear purpose, and arguments or proposing changes about something that's difficult for them to grasp, or even that sounds funky, like spam, like, because the average person looks at spam, and they, for them to draw a connection between spam and Bitcoin is almost impossible for them. I mean, I can definitely see this being the type of thing that perpetuated through the general public puts people on a pause button.
I'm surprised. I mean, it's got me nervous. Mm-hmm. The more I want to think about it, I would get very nervous, I think. And I wonder how it doesn't bleed into sort of like, price. It seems to be sort of divided or compartmentalized away from price right now, because price seems very mature. Mm-hmm. And I know you can talk about sats per dollar and stuff, but it seems like the financial markets around Bitcoin are maturing more than maybe some other facets of even just the discussion in the forum. Because I just wonder, like, how much change is happening here? How much change are we preventing? Like, even it seems like to me the people in the conversation don't even think the people they're talking to understand the conversation. So how scary and how confusing is that for people outside the conversation?
Yeah.
Or further and further away, that like the early majority or even the early adopters, mm-hmm. I think, are like, what is going on here probably?
Yeah. Yeah, I think that's true. I think a lot of early adopters don't have the technical proficiency to engage in the argument. And I would say to everybody that's out there, regardless of what side you are on this argument, it's not a great time for an argument. It's not a great time for change. I'm not necessarily saying Bitcoin should ossify, but I think...
Hey, Bitcoiners, I'm heading to Bitcoin 2025 in Las Vegas from May 27th to May 29th, and you need to be there. This isn't just another conference. It's the ultimate Bitcoin party. Grab your ticket now using promo code MATRIX or at the link in the description. See you in Vegas, freaks. Let's make this one legendary.
Change has to be looked at in a completely different lens than it would have been looked at in the block size wars in 2017, 2018, or, in the very early days, if we look at the things that may have happened in 2012 or 2014. Those are completely different worlds. And I think for anybody to try to make an argument that because a change or proposed change was made in that period and had a certain effect, that the market will react the same way to a future change. And because what they want now is they're just trying to get their hands around it and grasp it. And the messaging for Bitcoin is so difficult because we face this really unusual challenge. I struggle to find a parallel where, like, I gave you some examples earlier, right? Or VHS versus Betamax, or the evolution of the personal computer, or like all these sorts of things. There were companies behind them, And those companies had founders and CEOs, they had executive teams, they had boards of directors, they had investors. And so for better or worse, though, there were people. Somebody had to make decisions. And I've said this before, I think you can argue that one of the most effective forms of management, especially in a corporate structure, is a benevolent dictator, right? You know, because a benevolent dictator makes everybody still feel good, you know, and they're looked at as somebody with the greater public's best interest in mind. But a decision gets made quickly, and you move forward. And the worst form of organization is one where there is no leadership, no decisions are made, or they're really made in vacuums. Because one of the things that we also look at, a company trying to traverse, so I'll use, from the personal computer world. I was with a company that we were there at Gateway. So Gateway was founded in the mid 80s, I think 87 or 88. And we went through the innovator stage, the early adopter stage, the early majority stage, got into the late majority stage when issues came up and the company, you know, fell apart. Dell, on the other hand, to their credit, they navigated the whole thing, like, and they still exist. And I think you could say that Michael Dell, to his credit, played the role of benevolent dictator and guided the company through that whole process very well. If you study the details, you'll see there were bumps on the road. It wasn't like every quarter was a bang-up performer, but you know, they adjusted and they made these corrections. But what I can say is, having been with a company that still went from zero to, like you mentioned in the bio, we made it to being a Fortune 200 company, 25,000 employees, selling 10 million PCs a year. Well, one of the things we had to do to traverse this growth was reinvent ourselves several times. Not just the marketing piece, which is kind of what I've been talking about before, but all the processes and the governance and even the people who were in charge. Because one of the hard things, one of the reasons why companies that maybe start out the gate phenomenally, they have a great idea and a great product, maybe they get version 1 to market, right? And the innovators love it, and maybe even the early adopters love it. And let's just use a hypothetical example. You and I start a company, Cedric, and it's you and me. And I'm doing product development and marketing, you're handling finance, administration, and operations, just as an example. Okay. So I'm creating the products, I'm getting the orders for the products, and then, you know, when an order comes in, I send you an email and I say, ship the order, right? It's very simple process. And maybe we build this thing, it's a hypothetical product, but you know, we're able to build this into a $1 million a year in revenue sort of thing. And then you go, hey, I'm working 18 hours a day, 7 days a week. I need some people. And I say, yeah, me the same way. So we both go hire a few people. And now we each have a staff of 5. But we're still small enough that we can communicate amongst each other in a very efficient fashion. And if you're at the doctor someday and I need something done, I even know who to call. Okay, so we can make the jump from $1 million in revenue to 10 million, let's say, through that process. But now we're still being successful, and now we're growing on a path toward 100 million. Well, now we need 100 people, and we need a European headquarters because we're getting a lot of European workers. Well, At this point, I may not be able to be the head of marketing and product development and sales, and you can't be the operations guy, the admin guy, and the finance guy. So we got to hire a head of each of those groups. And now we're an exciting $100 million company. Do we hire the right people that maintain our culture? Can we rebuild and reinvent our processes fast enough to keep up with this growth? Does the third employee in the company who may not have been capable of growing with us, and now we have to hire in somebody that instead of working directly for you, you hire somebody that goes between Cedric and that person, and they get all bent out of shape because they feel they've been demoted. Like that's what happens inside companies. And what you'll find is there's a lot of failure because the people and the company and the processes couldn't adapt. It had nothing to do with the product. It had to do with their ability to keep the organization in place. Well, the reason I'm saying all this is it's hard enough for a company to do it with some centralization of decision making. So I think we as a Bitcoin have to be cognizant that this is a really freaking hard thing to do and not have the discord that comes even in a normal organization with a more efficient decision-making process. So I think what's happening is if I look at Core, my advice to Core is to them is to say, hey, you have to completely reinvent the way in which you interface with the rest of the community, the way you communicate with the rest of the community, what your change control mechanisms are. And I'm not as I've gone into the fray on some of this stuff, and I do feel passionately about it. I don't want spam on Bitcoin. We can get into the specifics of that argument, but I think this is more important. What I'm talking about is as I've tried to go into that conversation, what I've essentially been told is, well, you aren't a core contributor. You don't write code, which I don't anymore. I haven't for a long time, but I used to. And said, well, you're basically your opinion doesn't count on these topics because you haven't written code. Well, I think that's a great sign that there's a lack of adoption or recognition of where we are in the change. And not that Bob Burnett's opinion is necessarily important, but that hey, what they've essentially said is you're not part of the club, right? And there's only one way into the club, and it's not something I'm interested in or capable of doing. But what's happening within Core affects everybody. Some people may not realize it, but it affects everybody, and the concept of stakeholders, and I know you've spent time in bigger organizations and worked in I don't want to say bureaucracies, but well you work with bureaucracy, but you have to work with people, right? And so sometimes you have to be in a position where you can say, hey, a decision has to be made, and let's say you're in a decision-making capability. Are we going to do a new product? Okay. Well, who are the stakeholders of that product? Or maybe add a new feature. Maybe this is more pertinent to Core. We're going to add a new feature, or we're going to take away a feature. Okay. Well, who are the stakeholders? Certainly the other members of Core, the wallet developers and the Lightning developers and all the people who interface to it. Yes. Potentially the miners, potentially every node runner, potentially every user. From whom are you going to solicit input? how are you going to weigh those inputs within the core itself? Who kind of decides? So I think there's this belief that they can take some of the basic premises that come from FOSS, free and open source software development, which is, it's a cool thing. And we do use FOSS principles within Bitcoin, but that doesn't define Bitcoin. Bitcoin is much, much bigger with much more extensive implications and tentacles. And so that worries me. So I guess that's the reason we're talking about this is, this worries me. And I think the only way for the community to navigate its way through this is by recognizing that we're at this juncture, recognizing that certain behaviors and processes have to change, changing communication. So for instance, we talked about like, if we were in an organization, Cedric, and you're the CEO, and we're deciding whether or not to add a new feature to something, can solicit the input from everybody that you think is a stakeholder. Who are the stakeholders? The customers of the product, the customer support team, the developers, the marketing department. You go out and solicit from those people, the finance people, how much it's going to cost. And at some point, a decision has to get made. And I think if what you do is you have listened properly, that's most important. You've listened properly to everybody, and they genuinely believe that their voice has been heard. When you come back later and you tell maybe 30% of the people were on one side and 70 on the other, whichever direction you took, you go to that other group and you say, hey, I've made a decision, we're going to go this way. I heard you, but weighing everything together, I feel the best thing for us is to go this other way. Most people will react to that in a positive way. That they'll feel valued and needed, and they'll buy into the decision. But if you just come out say, well, if you don't listen to them in the first place, or you just came out and say, this is the decision, and you haven't expressed the empathy and understanding, you're screwed.
Right. I mean, that's what it seems like going on right now. Like, it doesn't seem like I wasn't there for. I think you were. There was a debate that was put on Twitter, and I didn't watch it. But I think you were in the room maybe for that. So it seemed like that was a climatic conversation here of sorts, but I don't know who gets to be on that stage even. And to your point, like, maybe people who have been influential in the past, maybe they don't fully understand either the present or the future. And I'm not trying to name anyone in particular. I'm just saying, like, because I don't even know who's on the stage. I don't understand the issue. What I grok is I believe Bitcoin is for monetary transactions only. So anything that sort of is not for I'm against. Yeah. So that's my position. I don't understand this issue and what the implications are, what it does, and I don't understand how big this is. Like,
well, first, who was on the stage? I mean, that was decided by the conference folks.
Sure.
So, I mean, and I think they did the best they could to try to represent it. They did pick 2 people from one side and 4 from the other, so it was a little unbalanced there. And the moderator, unfortunately, I think, also sided with the majority people. So there were 4 people, I think, representing support for a change. And the change, which revolves around op return, which, we'll just simplify it for people's sake here, is if I'm creating a Bitcoin transaction, essentially you could think of it as I can add a field, which allows me to embed some additional data. And that data could be a message, like hello world or something to that degree, or I love Donald Trump, or I hate Putin, or whatever. You could put whatever you wanted in there. That transaction, well, let's say it was me sending it to you. Every node in the network can look at that transaction, and they can apply what's called a filter. Okay, so the op-return field is currently what's called programmable, which says if I see to each node is individually programmable, and it says, hey, if I see in the op-return field a amount of data over a certain level, I'm gonna kind of ignore it, and I'm not gonna relay it. And we should probably even back a little further. So the way Bitcoin works is, in a normal transaction, if I'm just sending a Bitcoin to you, Cedric, very vanilla transaction. Essentially, there's 20-some thousand nodes out there. Each node is typically connected to 8 or more other nodes. And so I send that to you, my node and your node both send it to 8 other people who send it to 8 other people who send it, and it propagates through the network pretty rapidly. Okay, but each node has the ability to apply what are commonly called filters. In this particular, and there's a lot of different filtering that you can do. In this particular case, the filter would be, hey, if there is more than a certain amount of data in this field, I'm not going to propagate it. I'll see it, but I'm going to kind of ignore it. Okay. Now, if I choose to propagate it, it also means it goes into what's called my local mempool. Okay. So I think a lot of people know what the mempool is, but there's actually not a mempool. Every node has its own mempool. So me being a miner, my mempool, I'm not saying it's more important, but it has special characteristics because I am a miner. Okay, I create block templates. So when it comes, if I just saw your block clock go off about 30 seconds ago. Okay, so the world saw a new block, and when that new block is created, all the miners in the world will then look into their mempool, and from their mempool, whatever transactions are there, they will select the ones they want to be into their block. Meaning that if I filtered out the one that had the text in it, it won't be included in the blocks I'm trying to create.
But someone else could try to use that.
Someone else
transaction, sure.
Yeah. So, so the original op-return debate is that there's currently a limit in there, okay, and it's configurable. Okay, so what's called the standard or policy, it's around 80 bytes. Okay, so if you have 80 bytes of data, and you put it in there, the standard node in a standard configuration on like if I said hello world in mine, almost every node in the world would propagate that because it's a tiny little message.
Your net's not small enough to.
Right. So we'll ignore it. It's kind of spammy, but it's not
egregious at this point.
It's not egregious, right? But if on the other hand, I had, tried to put 10,000 bytes in there, I write a white paper, like on whatever topic, right? Well, a lot of nodes would consider that egregious and would not forward it in today's world. So what Core was proposing to be done was essentially to remove the limit altogether. So no longer make it configurable and not really have a limit either. So it would allow these messages, this spam, to propagate in a much easier fashion. Now their position appears to be, I don't want to say I speak for them, that the filters, their position is the filters haven't worked well, and there's no point in continuing to try to fight it. I'm doing my best to summarize the position, and let's worry about other shit. Like, and there's another group of people who are saying, no, this is a fundamental issue. And while it may be true that we really don't stop the spam from ultimately getting in the blocks, that's true, because there seems to always be some nodes that will relay it and some miners that will pick it up. We're still fighting spam, and we're making it at least more difficult and more expensive for them. So, and the word spam, by the way, literally is a extension of email spam, right? You know, which ironically, if you go back to like Adam Back and proof of work, was to prevent spam, was to say, hey, let's apply proof of work as a mechanism.
Well, so I think that I didn't mean to interrupt there, but like, so spam makes sense to me the way we're talking about it. And then, so I'm like trying to put myself in the mind of people who want, not the people who say, let's not fight it, but the people who are like, I want to put things in there. I want as much space in this op return as possible. We've had it since the beginning, the ability to go up to, let's say, 80 bytes. Why? What is the argument for why it was there in the first place, much less why they want it bigger? I'm not asking you to steelman it. I'm saying, like, I just don't understand the argument for things in there other than, yeah, I want JPEGs or NFTs, or I don't see good monetary sort of ethos in it. And I'm really worried that, like, okay, we got this argument over, because I get the sort of, probably the argument is one argument that I don't agree with in this case, but I can see people saying, well, people are free to do what they want. It's free market. Bitcoin is free money. So let's play within the rules, and I can do these things. And so fine. And then there's people saying, let's not fight them. Let's not even configure. Let them do as much as they want. So I worry, even if we allow, like, let's say we were like vigilant and we had lots of filters, but there was still a concerted effort and door open to a certain amount, that over long periods of time, that's going to somehow be a bad thing. Because we're going to fight. I would think the first order would be less people are going to be able to run a node, not run a node from a technical standpoint, but it's going to cost more money to do, a little like kind of like you were saying, a little more buggy, a little harder to kind of set up, a little harder to like get going. And I guess the counter to that, you could prune it, you could prune your node, but like that's very trusty, don't verify, like you want a full node. So yeah, I'd just be very long term. Like for me, this is like alarming that we're even having a conversation about how to have the conversation. And alongside this, I'm looking at Bitcoin at 105,000, which sounds very mature. I get that, it's a $2 trillion asset class, which to me actually sounds mature. It's not immature anymore from that perspective. It's not a pup, but it sounds like overall we're very immature as how do we proceed, how do we get along, how do we find social consensus on future issues. It's almost like torque, when something's small, like you can really kind of grab it and move it. And now we're in this place where like we don't know if we should move it a lot, but like, can we move it too much?
Yeah, well, I think you're right on. That's why, when we started this conversation, I think it's fine for us to have gone into this a little, and we can still even do a little more about what is spam and how does this all work. But I started with where are we in the maturity, and what are we trying to accomplish? And I think you summarized it well, because everybody in Bitcoin can have their own opinion. And as I've expressed my opinion and my thoughts, which obviously come from my background, and I think I have a lot of pertinent experience, but it's for everybody else to judge how much you like what I have to say. But we are at a point where confusing the marketplace, where us not getting along is much more serious than the individual topics. And it's just not the time for this whole thing to be coming about. Like the right answer for me is nothing. Like I haven't seen no compelling reason to change anything. And without that, there's a big issue. You know, I'll tell you something, interesting. You asked me about the debate. So the debate that occurred. I'm pretty sure the debate changed nobody's mind, by the way.
Right. Yeah. It's a food fight.
Yeah. I think that's accurate.
And they choose, in a way, they choose the people to kind of go in that direction,
Yeah.
unfortunately. And
Yeah, and there's some very smart people on the stage.
Sure.
On the one side you had Jameson Lopp and Peter Todd. On the other side we had Luke Dasher and Mechanic, and there's other Shinobi was on the stage. Who was the other person? There's one other person from kind of the for the change side.
Sure.
What was interesting though is,
hey, Bitcoiners, get your sats off your exchange now. This is not a drill. Thea is the world's simplest Bitcoin self-custody solution. With their module multi-sig vaults, you decide how to hold your keys. Thea is working day in and day out to bring you the most intuitive Bitcoin self-custody solution, regardless of how much you own or what your storage goals are. And they support your favorite hardware. Download Thea now for hassle-free Bitcoin self-custody at thea.us/Cedric. That's THEYA.us/CEDRIC.
one of the justifications from the for the change side revolved around, hey, this is good for miners. This is, this adds more money. This provides more fuel for the economy, the security budget, blah, blah, blah. What I found interesting from a very personal perspective was I was a miner. I was sitting there in the stage. I sat there for 2 days talking to people, and nobody asked my opinion of, as a miner, whether or not I agreed with that statement. I told a few people, to be fair, but that I don't agree with that I don't think. So there's this perception about miners, that miners are this capitalist to the extreme, meaning miners want to maximize revenue in every block. And I'm sure there are some that will behave that way, but I don't believe all behave that way. And I think given enough time and education, not all of them will. So there's a unpack that a little bit.
Yeah.
So the first one is, miners today make money through the block reward. There's a subsidy that can't be changed, and there's the fees. Okay. So if I'm constructing a block, which I do, I can, if I have a mempool and I take every single transaction available, including the ones that have a bunch of spam, there will be points in time where the most rewarding economic benefits to me in the next block is to pick maybe one that has a 10,000 byte op return, okay, as an example. That might be. Today, I choose not to. Okay, I filter those out before I create a block. When I filter those out, I'm doing it for a couple reasons. The first one is that before I care about the economics of the next block, I care about the best thing for Bitcoin in the long run. Because I care about my long-term survival more than a few sats in the next block, right? And I think most miners, if they actually think about it, now I think not all of them do, but I think most miners, if they actually did, would reach the same conclusion. There's a reason that Disney or Sony Pictures doesn't make porn. Okay, they probably could open a division. I mean, porn is the most lucrative, like, video production market, right? Why don't they produce porn?
It would cannibalize the rest of.
Well, yeah, I mean, yeah. They make a judgment that the best long-term interest of their company is to not do porn, right? So I use that as an example because I feel I'm kind of doing the same thing. I'm choosing not to produce porn for the long-term best interest. And I may not make the most money in this block, but I believe I will make the most money and I will help the survival of Bitcoin, which I'm 100% dependent on. I do not have a business if Bitcoin doesn't survive. And I think it only survives and thrives and moves along this S curve by being a great form of money. So I make that choice. Now, I may lose a couple percent in fees right now on occasion. Math would probably say I do. But right now, fees make up about 2% of my revenue. And so I may be giving up 5% of 2% of my revenue to do this. Okay. Now, the second thing is that I think as time goes by, miners will look at what they do differently. So we look today at a miner and as kind of this company chasing the block reward. Okay. And I think you and I've talked about this, I think maybe even on the show, but I believe we're entering a world where block space will become extremely scarce. And control over the block space will have lots of different monetary possibilities, including a derivatives market, where you can sell block space forwards, as an example. And now the whole monetization becomes very differently. Mm-hmm. So I think it was very disillusioning. I'm using a strong word. It's probably a little stronger than I mean, but I don't have a better one. To sit there as a miner and not have a group of people who are not miners say that part of their motivation is to reward miners. And, they're essentially telling me they understand my business and they understand the future of mining. And I don't think they do. So which it kind of gets back to that whole thing about communication and who's invited to the party and how do you solicit input. And, there are certain topics that I would say I should have like zero voice in, as an example. Like as we sit here at the moment, I've given this example. One of the issues Bitcoin faces is quantum resistance. Okay, so how do we create quantum resistant addresses and all that? I had a chance out there to talk with a guy named Hunter Beast, who's a very bright guy, and he's a developer working in this specific area. He has a BIP 360 about a path to help us create quantum resistance. And I'm trying to learn the implications. I think there are eventually going to be some minor implications, but at this point, I am not qualified to have a voice. I'm going to bring my knowledge level up to the point, because I think it does impact mining. There'll be a point at which I think I will have a voice. Whether anybody listens to me or not is a different question. But like Hunter, he's a bright guy. Enjoyed his company and had dinner with him as well. And he can encapsulate that problem, and I think the core team will listen to him on this topic and give his BIP at least appropriate consideration when it comes about. But the question is, as we reach the point where that BIP needs a decision, how will we go about it? What will be our process? There are also, I guess one other thing I just kind of remembered is one of the things that I had told to me several different times was, well, this schism, this controversy, the acidity and toxicity that is a strength, not a weakness, and that we need to have these sort of brawls within Bitcoin, and that on the backside of it, we'll all be better for it. And it's, again, another thing I think is true when we're in the innovator and the early adopter stage, but not true in a later on stage, right? So, and it's going to be very hard, because the people who say those things, some have been around in Bitcoin for a long time. It's probably been true to date, but I don't think it's in something that we can extend.
Well, I would think that, at some point, it's like, I like the expression that HODL has, American HODL, is like, seat at the table. And I think that comes with self-custody Bitcoin. But as more people put their Bitcoin into the EFTs and Bitcoin treasury companies, then the people who will be representing them at the table change from that perspective. And like you were saying, like, so the people who had a great opinion or solution earlier might not have the same best or great opinion now, but also the people who are asked or just push themselves at the table are going to change. But all of this, I mean, just sounds like really worrisome to me, just from the long-term implications of how do we get this right, and are we really ready for prime time? I think a lot of people, it seems like the conversation in the Bitcoin space, I wouldn't say community, but just where conversations are had, are more about Bitcoin treasury companies and who should buy my Bitcoin for me and who should babysit my Bitcoin. And right now, like, people are trying to figure out how, like, when I mean use it, like how it should be used as money or other things. And should we allow it to be used for other things? I love Bitcoin mechanics analogies. He has the one of like either a pool or jacuzzi, but like you could have a free pool, but if you let people go to the bathroom in the pool, like it's no longer going to be this awesome, great free pool. Yeah. And another one he has is like, you could, if you don't prostitute your wife and daughter or daughters, like you're not foregoing revenue. You're living by your morals.
Yeah. And very much like my porn example.
Yeah, right. And so part of it could be like, we're not expanding the division to work because we're worried about how it affects our brand. I'm not expanding the division because we don't do that. That's not something we do. And I feel like there's just not enough. And I think of myself as somewhere between early adopter and early majority. Right, like, and that doesn't mean that I'm not getting into the OG comment or how long I've been around, how many shows I've recorded and stuff, but like, just, I'm not someone who's going to deal with the first bugs, and I didn't know about the ideas before. I wasn't pioneering those ideas when, 12, 15, 20 years ago. And I came to this probably more to fight inflation than and that comes with price, right? And that. Yeah. Or to fight, and it's not, I'm not saying Bitcoin's an inflation hedge, because it's not a direct one-to-one deal, but it can't be debased. Someone can't come between you and your thing. I was looking for something in life that I could have a lot of sovereignty over, even though if I didn't use that word, but I still consider myself with this thing to be more mid to late. I got a wife and family, and I'm not trying to live a crazy life.
Yeah.
And when you start talking about all this stuff, it sounds like we're still in the crazy times, and where it could go. And I am very like, we should not mess with it all. In fact, we should get rid of all what we would call spam, you and I would agree.
Yeah.
And even a little bit is too much.
Yeah.
And so then that makes me say, like, who is core? Who gets to work on this? Like, why aren't people more concerned about who's tinkering with the money
Yeah.
than with like what securities I could buy on the fourth layer of this thing?
Yes.
And so I don't know how much is going on right now and how big this changes, but it's really alarming from like what
Yeah.
this could go from, like when whatever we do today could have huge ramifications in the future.
Well, that's, I'm glad you said that, because I think I'll speak on two perspectives, okay? I think most of the people in core have been around in Bitcoin for a long time, 8, 10, 12, even 15 years, like Luke, okay? They've been and most of them, by the way, are relatively young still, meaning people in their late 20s to, let's say, early 40s, okay? Which means they've spent their whole professional life in this thing. I think from their perspective, Bitcoin has been around forever, and the pace of change may be painfully slow. Let's give everybody the benefit of the doubt and say they want the best for Bitcoin. Most of them say they believe that Bitcoin is best as a monetary network, blah, blah, blah. Okay. So I think they're frustrated because they want shit to happen faster and they feel constrained. But let's look at the optics a different way. Like I said, I believe Bitcoin can be money for the next 1,000 years. Is the first 15 years that far in its maturity? No, it's nothing. It's nothing. It's 1%, 1.5% of its life. We're in the very, very early stages, and
no money has lasted really, except for maybe gold. But you could debate,
yeah,
how much of that 5,000 years it's worked as peer-to-peer money.
Yeah, yeah. So, we're at a point where if we make changes in a rushed way without understanding all the implications of that, I mean, we'll never understand all the implications of change. I guess be realistic about that. But we've seen unintended consequences of change in the past. SegWit and the block size wars and Taproot and all that. And
even bugs like an inflation bug, which some of the longtime developers have been around and a part of.
Yeah. So I think that it's probably, I use the word disillusioning about myself, but I'll say it's probably disillusioning to some of the people in the core that, we can't make all these changes, or we're being constrained or held back or all that. I mean, I get, as a guy who comes from a product development background, being constrained can be very difficult. I had that early in my career. I left, I started my career at Zenith, which was a large TV company. We had a PC division, and it's just a short version of the story. I worked on some of the world's first laptops, and did that for about 5.5, 6 years. And as a engineer, product guy, technologist, this would have been 1989. I said, well, we're starting to see a path to making laptops really small and light. This is going to sound obvious to people, but
this was 1989.
But remember, it's 1989, and at the time, the average laptops were selling for like $7,000. They were 12, 14-pound behemoths. They were, obviously very limited mobility. Even though they had batteries, you really wouldn't use them in a battery mode very often, right? They wouldn't fit on the tray table of an airplane at the time, as an example. Okay, but me and a couple other guys saw a path to much smaller and lighter laptops. So we went to the executive team at Zenith and said, hey, this is what we want to do. We want to build these laptops. Well, this is kind of part of that organizational evolution to a certain degree. And what happened was, by that point, the sales folks, and maybe to a certain degree the finance folks, had gained a lot of power in the organization. We were very successful. We were selling 1 million laptops a year in that period. And they said, well, we've talked to our customers, and what they really want is they want a $5,000 laptop. They don't have a problem with this 12-pound thing. They just want it cheaper. And if you can make it $2,000 cheaper, they'll buy a shitload more. Yeah. So, we said, well, this goes back a lot of years now, but my recollection of it was, well, we could do that, but we really think we should be more trying to build 2 and 3 pound laptops and really make them mobile. And we couldn't get buy-in to it. So we left and we did a startup to develop that kind of product. And I'm not saying I'm always right, but I was definitely right in this case that Zenith ended up flopping as a result of this, because they resisted that change, and I had to force that change through as an engineer. I have a feeling the core developers are feeling like I do. Okay, so partly what I'm trying to say is I'm sympathetic to it, but I think Bitcoin is different. We're not developing laptops; we're developing money. And so getting it for an individual, deciding whether or not to get in or Bitcoin or not, it's not buying an individual product that means they blew several $1,000s. Let's say it's a waste, right? It's a lot more significant. Do corporations use it in treasury? Is it part of a pension fund? Do individuals bet their retirement on it? These are different levels of risk, and it's just not it's not a good point for the change. I guess that's the moral of the story.
When will be the good time for change with Bitcoin? That's kind of the first question that comes to mind when you say something like that. Not now, but when? And it seems like we want change, though. It seems like we just want change in the opposite direction of the way the change and the wind is blowing right now.
Yeah. Well, Bitcoin has a couple bugs or exposures that have to get fixed. So change will come at some point. One is timestamp or a time bug. So we use a time clock inside Bitcoin that it goes back to a Unix thing, if I remember right, where we're counting the number of seconds from January 1st of 1980, and we only have a certain size field. And at some point, I can't remember when, 10 or 12 years from now, we go past that point. So it's kind of the Bitcoin equivalent, for those of you who are older, as the Y2K problem. Right. It's almost the same thing. So I'm quite confident that we'll get, it can be.
Those seems like the change we have to deal with. So it's we have to make change because we're running into a wall, which is usually the kind of thing where solutions get formed that tend to make sense, even if we can't envision them now, but you're up against.
Yeah. Now, at the point we sit today, I'm not aware of a proposal to do that wouldn't require a hard fork, meaning that old nodes who haven't upgraded software everybody would have to upgrade software in order to.
Right, it wouldn't be retroactively fitting old rule.
Yeah.
Right. Is that scary? Because just the whole lift and shift.
Yeah. I'm not terrified of that one because I think it will be dealt with much like Y2K. That for those again who are a little younger, there was a bug basically in all the computer systems around the world that we had a 2-digit year field. And so the concern was as we approached the year 2000 that the computers would interpret as 1900 instead of 2000, and the whole world will fall apart. So there was hundreds of billions, probably trillions of dollars of system upgrades all through the world, and we all sat on as we turned over to the new century. All of us in the back of our minds were wondering whether or not the power grid was going to fail, or the internet was going to fail, and the phone lines were going to fail, and we didn't know what was going to happen. And it ended up being a nothing burger. Right. But it was a nothing burger because a lot of people put a lot of work into making sure it wasn't. And I'm pretty confident that Bitcoin can do the same thing. But there are other issues, like I mentioned, quantum resistance. Do we need it? Can we do it without a hard fork? Really interesting problem. I had a dinner conversation with a couple bright guys, including Hunter, who I mentioned before, which is, do we need to, like, Satoshi's Bitcoin is held in a non-quantum resistant address. Most Bitcoin today is kind of in a properly taken care of, can be protected from quantum resistance, but Satoshi's kind of are sitting there exposed. So what would we do? Like, the first person that or organization that creates that could essentially lay claim to all of Satoshi's coins. And assuming Satoshi is no longer alive or no longer interested or capable of moving the coins with his keys, should we force that action? And if we did, should we burn them?
So you're saying, should someone via the community rescue the keys, rescue the coins, and burn them, and then what are the...
Well, there's 3 possibilities. Maybe somebody will come with more, but I got 3. The first one is we take them and we burn them. But that's not really... There's a problem with all of them. The problem is, what if Satoshi actually is alive? Right. What if, or he's given the keys to
someone who doesn't know how to move them,
and maybe that's even with some attorney, and 30 years from now, the attorney is going to give all those to Habitat for Humanity or something. Like, we don't know, right? We have no idea what the intention is. So we could burn them.
Right, but then we would be putting our intention on it.
Yes. We could leave them there, but then what happens is there's a race, and the first quantum computer
wins,
and they'll get all of them.
Because this presumes that we, being the group who wants to save them and move them or whatever, gets the quantum computing technology before an individual or group who wants to take them.
And that could be, if I was...
Which is, I think, how it should go. I think it should just be a bounty.
But which is fine, but this is a deep philosophical thing.
Sure.
Because is it, what if North Korea puts everything they have into getting it, and they get 900 Bitcoin?
Well, I think that's how it works.
900,000 Bitcoin, excuse me.
Yeah, okay. I think that's how it works. But
so we have to know that that's...
Bitcoin's for enemies, but I hear you.
Yeah, that's the possibility.
That's the possibility, yeah.
The third possibility...
Who's to say the North Koreans aren't the nicest people in the world?
They might be, yeah. The third possibility is we essentially take them and reissue them. So they come back through, we kind of throw them in and redo, like almost reissue them on some schedule.
Sure, we piggyback on the disbursement schedule that's already exists to 2140, and we just figure out some ratio and we just dole them out and add it to the block award.
Right. Or yeah.
Right. So I find that anything that takes more than one step of we have to agree to get them and then agree to do something else is a bridge too far. Yeah. And I think that group would be beaten by a group with a an ulterior or nefarious motive
Yeah.
first,
Yeah.
because it's too valuable.
Yeah. It's I don't know where I sit yet. I'm still digesting.
And this all presumes that some being or entity or group doesn't have the keys and the
Yeah.
ability to move them anymore.
Yeah. I mean, to me, the ideal is we kind of just leave them there, but hopefully could still create quantum resistance for Satoshi's coins, and have a way for him to still get them.
I see what you're saying.
If he
So
needs
they stay, but still giving.
Yeah. So we're respecting the property rights of him and anybody else. I mean, that would be, I think it would be difficult for anybody to argue that would be.
But what if Satoshi left them as a bounty? What if Satoshi was fully aware, not of quantum computing, but of the unknown threat that could take coins that wouldn't be resistant to SHA-256 at some point, something like that.
Yeah. Well, it's just because it's not the SHA-256.
Sorry, I misspoke there,
but it's the address.
Sure, I
But
misunderstood, but
it's okay. But these are really the big questions, right? And I think that there's a lot of effort in a lot of other things. It's not worth going, whether it's CTV, which is check, template, verify, and can we create vaults, and can we do some of these sort of things. And I think there's some technically interesting things there, like the concept of a vault. Are you familiar with that? Like, it's the idea being that it would be very easy to, let's say you have two children that are relatively young. Okay, I don't want to dox them or anything, but I've met them, and they're relatively young, and let's say you have a nice pile of Bitcoin, okay, and you want to create it, essentially something like a trust that says at age 21 they're each going to get one Bitcoin, at age 30 they're going to get one, at age 50 they're going to get one, and so you create this almost like time lock thing that will release. You create the transaction now to a location that they have the keys for, or you probably even provide that. This is the key to this address, and I've set this vault up to release these funds to you this way.
so it's more programmable money.
Yeah, so it's really cool stuff. Now the bad news is, I think there's still uncertainty about, like, I think most people would have a difficult time arguing that that's a pretty cool use case. It gets difficult to know what it might open up, though. Like, what are the second and third order effects of this? And is that risk worth this feature?
Right.
Don't know. I know that some people have advocated, and there's covenants and some other stuff too. Some people have advocated that they think that these sort of things could be a path to creating essentially more virtual block space, like some of these ideas to widen the bandwidth.
Right.
My opinion, based on everything I've seen thus far, is that they have very minor impacts on that piece.
But we have to understand, I guess, like things we being a weird way to say it, but things that some people might want might also give back or room to some other things that we don't want at the same exact time.
Yeah.
And so it's like, do we rather live without it? Because if there were any unintended consequences, we'd get some things we don't want with it.
Right.
Or do we live with the unintended consequences, and how do we manage that? And I think one way maybe people are thinking about sort of like, the bloated chain is like eventually maybe, things like computer components will be cheaper. And so, you'll be able to manage more on your personal node, more space. I'm not trying to take that whole rabbit hole. I just, I'm sure everyone has a view, and that's what we were getting at the beginning of the show, is like, it's like, who should be having the conversation, and what way should the conversation be conducted? Obviously, the more it's done in a way that's like above board, transparent, and tries to include as many different stakeholders as possible is better. I just wonder, I mean, like we're going to Bitcoin 2025 in a week. We'll be in Vegas. It'll probably be more of a party than anything, but like, and if price keeps up, people will be very excited, very relieved, very happy. I don't know what the math is on that, but almost 2.1 trillion for the entire data set. But like I just feel like these conversations are becoming less and less at the forefront, period, as it becomes more financialized and more people come again for the gains, not the money. And I worry about that. I don't know how to make people, I mean, you say this and it's like, how do you not want to run out for anyone who's not and run your own node, self-custody? But then you say, okay, well, now that I'm closer to the software and the technology side of this digital, let's call it gold for less of a better term, like what are the implications and how not ossified is this thing and how can someone fuck with my money? That's what I get worried about. And like, who are these core people? Like, how do you become core? Like, because there are people who are working on probably Bitcoin core ideas that are not core, but they're just as much core in terms of like ethos and attempted contribution or potential contribution.
Well, I think that's a great point, that the community is global now. That not necessarily working on Bitcoin Core, I'm going to kind of put words in your mouth a little bit, but the people working on Core are working on the client that's running the nodes, okay? But there are tons of companies now, some in a vacuum, some in for purposes, that are developing products and services to sit on top of this that Core doesn't know about, that none of us know about. And they're going to come out of left field, hopefully with something real cool and innovative.
Right.
But who knows? A change in the configurability of op return
Can put someone out of
put
business.
someone out of business and you didn't even know that you did it.
Right.
And
that might have been a greater contribution than anything we get out of op return.
yes,
What that company
Yeah.
might have done.
so it kind of comes down to, change is funny. The same week I was in Austin, so it was interesting. The week I was in Austin, we had two conferences in Austin and one in Orlando in the Bitcoin world. They were all significant and material. The first one I mentioned was the Texas Energy and Mining Summit. Okay, put out at Bitcoin Park in Austin. I spoke there, like Luke was there. There were Parker Lewis was there, Marty Bent was there. There was a lot of names that I think people would recognize there. And we talked a lot about energy and mining. Although we did loop into this op return thing too, because if you look at the Venn diagram, that is
Like transaction fees and
transaction fees, block template creation, all that sort of stuff is part of that. Okay, and then in our the same week in Austin, we had BTC++. There were a couple people who went to both, but now we had guys who were coders, mostly either people working on Core or adjacent to Core, or people from mining pools, from wallet suppliers, or wallet vendors, those sort of folks. Okay, so they were there. Simultaneously in Orlando was MicroStrategy, holding a conference that it was the first time I heard this term. I said, well, the Bitcoin suits are in Orlando, and essentially the worker bees were in Austin, because those of us, like I said, mining or coding, like kind of getting our hands dirty, you could think.
picks and shovels.
Yeah, we were in Austin, and the
suits and the bankers and the
the
money guys were in Orlando.
Yeah, and it was very interesting if you think about it, because now what's basically happened is we just parsed into three groups. So if you look at the Venn diagram, kind of representing a big piece of the overall Bitcoin ecosystem, but each with its own conference, but with overlaps and dependencies on the others. But nobody in Austin was talking about what was happening in Orlando. I have no idea what the people in, I was in Austin, like, but I'm guessing the people in Orlando were completely oblivious to what was happening in Austin.
But I would think the thing that's disappointing to me, and I don't like to use that. I mean, but it just seems like the people that are buying Bitcoin, saving in Bitcoin, are tuned into that Orlando conversation and what is happening with price, what is happening with investment, what is happening with money placement, versus like what is happening with the protocol.
Yeah.
And it really makes me think, like, I mean, I'm having a lot of pause because, like, if you're going to store some of your life's wealth in there, all to zero, somewhere in that spectrum, you really want to understand how this thing works. And I think you owe it to yourself. And I think that cypherpunk, that, or I forget what it's called, the innovators, we need more of that back, of that sort of, like, I don't know what the word is, but taking it so seriously in terms of the implications of the ethos, and not so much where price is going.
Well, that's an interesting point, because, remember I was telling you about, like, I gave you this hypothetical about you and I having this company and moving it from 2 guys to 10 guys,
Right.
from 100 guys to 1,000
Right.
to 10,000.
100 million, and hopefully a billion, and 10 billion. Right.
And the number of employees growing too. Well, I've been through that. Like I said, all the way from almost 0 to 25,000.
Right.
Rode the whole frickin' thing. The most difficult thing to do is to maintain the culture and the spirit from the beginning to the end.
Sure.
It's really difficult. And you're saying the same thing. You're basically saying, like,
because the skill sets change too. We've kind of talked about this. I mean, like, the person who takes you from it's a $100,000 a year ARR company in marketing is not going to be the person who's going to work for you at 100 million ARR, and then at $1 billion, you're going to need probably a different person as well. It's a very rare breed of the person who can perform at the highest level at each of those phases.
Yeah, especially when those are tight together.
Right.
Now, if that's a 40-year period, then the pace of personal growth of the person
has a chance
of staying
right.
with
But if the pace is like,
but if the pace is
4 months or 4 years, it's incredible.
It's almost impossible,
Right.
unless you got somebody who already ran $1 billion
Sure.
organization
and has been through
to
the whole
join
arc
you
before
to go
Right.
through the whole thing.
Right.
Yeah, that's a tough one, and again, because we lack a CEO or a board.
It's funny. There's a generational warfare a lot in Bitcoin. I don't know if we were talking about this before the show but there is something, and in most industries and careers, people say, why did that lawyer get $1 million? It took him 15 minutes. Well, the execution of the idea, from having the idea to being able to implement and execute, took 30 to 40 years to contemplate and put together.
Yes.
And to see it enough that they can then execute without having a flaw or a problem. So yeah, they can do things quicker, but it comes with the experience too. Right. And I think that's something that, like, Bitcoin is only 16 years old. So that most people can only have about 16 years of hardcore experience within this system of pontificating on it. So we're all kind of young. Yes. In that regard, and then the system's very young, and so I'm gonna wrap it up here. I want to go to Vegas. I want to have fun, but I do want to. I'll leave it to you. If we try to bring these up because I think that not everyone, a lot of people want to have the rah-rah conversation, and I want to have fun, but I think that this is very serious.
Well, what I'll say is this. A lot of what we talk about is scary or daunting. If we participate, if we remain vigilant, then we got a really good chance. One of the things I've said, I've had some pushback on, as I said, the hodl mentality can be dangerous. I think it has pushed certain people, but maybe a lot of people, in a certain direction. And the thought being like, hey, I'm just going to sit back. Maybe I'll do my fiat job. I'm going to make as much money as I can. I'm going to stack sats. Okay. That's a dangerous attitude.
That's what, I mean, that it is. That's what got me here, though. Like, I wanted to check out,
Yeah.
and I just wanted to not think about things.
But it's, and forgive me, I know this will offend certain people, but it's a bit selfish, because we have to remember that Bitcoin is not a stock. Okay, so I think a lot of people think about this in the much way as like, hey, if you want to sit back and do your fiat job and take all your free cash flow and buy Apple stock or Amazon or Nvidia or whatever, that's okay, because what you've done is you know their stock. You're essentially hiring somebody,
Right, an
else.
owner operator.
There's an
Yeah.
but we don't have that. You are the owner operator,
Right. So you don't want counterparty risk. You become your own counterparty risk, and you have to manage and self custody. And now we have to be the owner operators of this protocol.
Yeah.
And it's a lot of work, and that's what we're getting at. Like
Run a node. If you can mine, or invest in a miner. By the way, not the public ones.
Right.
But that's a different conversation. You know,
Custody your own Bitcoin.
Go to conferences, interact with people.
Find out who's working on your money.
Yeah. You know, be like I said, be aware and conscious, and whether you have a big Twitter following or not, or social media following, voice your opinion about certain topics. And you know, if you have 14 followers, well, hell, still let those 14 people know what you think. And by the way, you'll find if you interact, and you say intelligent things, that will grow. I mean, I don't do Twitter to try to get a big following, but you know, I've grown organically to what I have, and you know, you've done what you have. You know, so I guess what the bottom line is, you know, Bitcoin is participatory, and don't assume and rely on everybody else to do all the work.
Right.
So
It's not a free ride.
yeah.
Bob, this has been so incredible. Thank you so much.
Thank you,
I really
Cedric.
appreciate it.
Thanks for tuning in to this episode of the Bitcoin Matrix. If you enjoyed the conversation, don't forget to like, subscribe, and drop a comment below with any questions or thoughts you may have. We'd love to hear from you. You can support the show by checking out our sponsors and affiliate links in the description. It helps keep bringing you great content while connecting you with awesome products that I believe in. Share this episodes with your friends, family, or anyone curious about Bitcoin. And let's keep growing this community together. Stay curious, keep stacking, and I'll catch you in the next one.